Hello friends, good morning to all of you. And today in this video, we are going to start the next chapter from the module B of the RBWM JAIIB, which is related to the retail liability products. Now we know that in retail banking, we are having the liability products, we are having the asset products, we are having the other products also. So the liability product is related to what? It is related to the deposits, the types of deposits, right? So we are going to talk about them all. So we're going to talk about all the important updates, all the different type of accounts like saving accounts, current account, the rules for the minors, the rules for the illiterate, each and everything. So do confirm the audio video quality at the earliest so that we can proceed. And the complete course for JAIIB is available, like where you will be getting the 4 papers in complete, and that will be covering the full course videos, chapter wise previous year questions, mock test, mega test, and the PDF notes. So hurry up and do download the application at the earliest. A very good discount is going on right now. We will be getting the complete course just for 2599. So if you want to get the complete course for just 2599, just do write JAIIB 2599 and WhatsApp it to the number 83609 44207, and I'll be sharing all the details with you. Right? So let's start the session. It's related to the important retail liability products. So it's the chapter number 8 from the module B of the retail banking and the wealth management, right? So first of all, let's have a look at the topic related to opening of the current account. Now, current account, there is no limit related to the transactions, related to deposit transactions, related to the withdrawal transactions. And whenever the account is to be opened, like while opening the account, the bank can be accepting the cash, the bank can be accepting the check, like it could be related to the same bank or it could be related to some other bank. And for the check from another bank basically indicates that we want to transfer the funds from the existing banking relationship. And also the verification is to be done properly. We do require the KYC documents. We do require the firm registration documents, right? Those are also required. And the verification of these documents is also to be done. Like the proper due diligence is to be done. We say it to be the due diligence. Like when we are to check the documents, particularly, we are to check the validity of the documents, we are to positively establish the documents, we say it to be the due diligence, and it is mandatory. And it is mandatory to ensure that we are having no multiple banking misuse, and also no undisclosed credit exposure is there. That's why we basically do the disclosures about it, right? And also banks must be verifying like whatever the existing facilities which are going on. We are also to verify the credit facilities, like outstanding credit facilities which are already there, the exposure which is already there, or exposure across the banking system. That is very much required. Why it is required? Because there are RBI guidelines related to it. So if you want to open the current account, we have to look into the RBI guidelines. What are the RBI guidelines? So borrowers who are having the exposure lesser than 5 crore rupees, there is no restriction related to opening the current account. There is no restriction related to granting the CC or OD limits to it, right? But it is mandatory that the borrower must be informing the bank if the exposure is going beyond or basically reaching 5 crore rupees. Why it is required? Because in case if you are having the exposure with some bank, or the borrower exposure is greater than or equal to 5 crore. So let's say A is the borrower and A has already taken a bank loan of 6 crore rupees. Now the condition is satisfied. What condition is satisfied? That the exposure is above 5 crore rupees or equal to 5 crore rupees, equal to 5 crore rupees. The condition is satisfied. Now in that scenario, the current account rule says what? That bank having minimum 10% exposure in total banking system exposure, only there you can be opening the current account. So in case if you are exceeding 5 crore or equal to 5 crore, In that scenario, you can be opening the current account only with that particular bank where you are having the exposure minimum of 10%, right? And also you can be having the CC and OD limit with that particular bank only. And if you are talking about the other banks, let's say where the exposure is up to 9%, up to 9%, right? In that scenario, when the exposure is up to 9%. So those lending banks can be opening the collecting accounts. So collection accounts can be opened, but not the current account. And also whatsoever the funds, those will be transferred to the collection accounts. That is to be transferred to the working capital account. That's a CC or OD account within 2 working days. That is required. So if I quote you an example, let's just have a look at an example so that you can understand it well. Let's just have a look at it. So let's say person A has taken a loan from different banks, XYZ Bank and the PQR Bank, and the total exposure is 6 crore, as I told you, right? Now the person A has taken 10 lakh of loan from the particular XYZ Bank and 5.9 crore of the loan from the PQR Bank, right? So the condition is satisfied, like the exposure is greater than or equal to 5 crore. So definitely the A can be opening the current account only with the banks where the minimum exposure is 10%. Now the minimum exposure, like the total exposure is 6 crore, the minimum exposure is like 60 lakh. Now only those banks where the exposure related to person A is 60 lakh or above, there only the person A can open the current account. And with the rest of the banks, like in the case of the XYZ Bank, it can just be opening a collection account. It can just be opening a collection account, and whatsoever the amount that is transferred to this collection account, it is to be transferred to the working capital account, CC limit account or OD limit account within 2 working days. Clear with it? Clear with it so far? Okay. So that is a RBI guideline related to opening the current account so far, right? Now, after that, it's about the monitoring of the newly opened accounts. It's important. Now, you should be strictly complying with the KYC guidelines. And the KYC guidelines for the banking are given under what section? Kindly do let me know because we have already covered it. Under what section the guidelines for the KYC AML are given? Those are given under the section 35A. Section 35A of the Banking Regulation Act. The guidelines are given for the banking system related to the KYC AML. And we should strictly be complying with the KYC AML guidelines. Like we should be monitoring the suspicious transactions. Let's say if there are any kind of the suspicious transactions, those are to be taken care of. If there are unusual credits, those are to be taken care of, right? And also the third party credits are allowed. Yes, those are allowed, but those must be genuineness. There must be genuineness of the transactions. Those must be genuine, and there must be the genuine of the transaction when we are talking about the third party credits, right? And further, what should be the credit of instruments? Like if you have received any of the checks, any of the draft, any of the refund orders, any of the account pay instruments, only those instruments which are in the pay name and the pay name is matching with the current account name, only those balances should be credited to the account. And it's a duty of the bank so as to provide the account holder with the statement of the account every month. So statement of the account is basically required to be given to the account holder every month without any extra charges. That is basically required. Then after that, it's related to transfer of the accounts. So it was the Damodaran committee recommended that particularly that the customer can retain the same account number. right? That the customer can basically be retaining the same account number when you're shifting accounts from one branch to another, when you're moving from one city to another. I'm talking about the same bank here. It's about the facility for the account number portability. Like if you're basically transferring from shifting from one city to another, or let's say you want to shift your account from one branch to another, in that scenario, you can be doing so. And this that was basically recommended by the Damodaran committee. Then it is related to inoperative accounts. So inoperative accounts are basically those accounts where there are no transactions for the last 2 years. And how you can be reactivating these accounts? Let's say if you're having a inoperative account and there were no transactions for the last 2 years, how you can be reactivating such account? First of all, you should be obtaining the fresh KYC documents. Those are to be obtained, right? And those are to be verified. And the bank should be satisfied about the reasons of inactivity, that why the activity was not there, why the operations were not there. So after that, the account can be reactivated. After that, the accounts can be reactivated. And what do you mean by the dormant accounts? Now, you should be knowing the difference between the inoperative accounts and also what are the dormant accounts. That's very much important. See, for the inoperative accounts, I've already told you that when there is no customer initiated transaction for the continuous period of 2 years, then those are said to be the inoperative accounts. Like interest if it is credited by the bank, service charges if debited by the bank, auto debits by the bank, those are not considered to be the transactions. Those are not considered to be the transactions, right? But when we're talking about the dormant account, it's the another state. Like dormant account is an inoperative account, but with operational restrictions. So dormant is what? Dormant is just like it's an inoperative account. So we say if it's an inoperative account, plus if the bank has restricted the account, if the bank has imposed the restrictions upon it, then we say it to be the dormant account. So customer is cannot be freely operating the account without reactivation such account. That is said to be the dormant account. Getting it? Is that clear? Now, after that topic, it's about the closure of the current account. What are the process requirements, first of all? So it could be the reason, and bank should be ascertaining the specific reason, that what is a specific reason that the customer wants to close the account. And further, the bank definitely tries so as to retain the account, so as to continue the account if it is possible, right? Definitely the bank will be asking first of all reason, what's the reason for closing the account, and the bank will be trying its best so as to retain the account. And what documentation is basically required? You do require a written letter from the customer. Written letter from the customer is basically required. Request letter is required, and it should be signed by all the account holders or partners. Then only the account can be closed. Then only the account can be closed. Clear? And no interest is paid in case of the current account. I have already told you this is a very basic thing, right? That in case of the current account, no interest is paid. No interest is paid to the customer. After that, it's about the saving bank accounts. It is about the saving bank accounts. Saving bank account is a general account, like you do open it for the saving purposes. And further, like it is for the individuals, for the households, and in some cases, it's also allowed to the trusts, right? And some NGOs, it's also allowed. So you can be earning interest upon it. And it is basically there so as to encourage the saving habit. So as to encourage the saving habits, and definitely it provides you with the interest income. You can earn interest upon it, upon the deposit amount. At the same time, you'll be having the liquidity. At the same time, you'll be having the liquidity because it's a demand deposit. Both the saving deposit and the current deposit are the demand deposit, that whenever you do require the money, you can be having the money, you can be withdrawing it from the bank, right? So what are the advantages? First of all, it encourages the saving habit. It inculcates the saving habit among the customers, right? And definitely you can be earning the interest income upon it. And also you can be depositing the check payments toward it. And also you can make the payments by way of issuing the checks. That's also possible. And it acts as a proof of income. Let's say if you are a salaried person, then you can be showing your statement, and it basically acts as a proof of income. And also it can be acting as a passbook. The saving account passbook can act as a identity proof and the residential proof for the account holder. And you are also allowed the electronic transactions. You can be participating in NEFT, you can be participating in RTGS, you can be participating in UPI or online transactions through the saving fund account. That's an internet banking facility, and online banking are available, mobile banking are available. Now, what are the advantages and importance to the bank? What is the advantage to the bank? So, saving account balance is a part of CASA. CASA is basically considered to be said to be current account saving account balances. Why this is important to bank? Why the bank is always after the CASA? Why the bank want to mobilize the CASA? See, because it's a low cost deposit which will be available to the bank. It will be a low cost deposit. Why low cost? Because if you compare like saving account interest with the fixed deposit interest, it's quite low. The saving account interest that the bank pays is quite low. Let's say the bank is paying 3.5% on the saving account balance, but let's say 7% on the FDR or recurring deposits. So in case the bank is having much more portion related to the CASA, the net interest income will be higher, or the net interest margin will be higher. So it improves the CASA, in a way improves what? It improves the net interest margin. So we can simply be saying it's a low cost deposit that will be available, and it's going to improve the interest spread and the margin. In a way, we can say it is going to improve the net interest margin, that is NIM. And also it's going to provide you with the strong retail deposit base, so the cross selling is possible. You can be marketing the other products. Marketing the other product means you can be doing the cross selling. So if you're having the saving deposit accounts with you, right, it means you are having the customers who are associated with you. And when you having the customers associated with you, you can be selling the products to them. Cross selling can be done, right? So that's the case. Now, what's the eligibility so as to open the saving account? You must be a legally competent person. You should be legally capable so as to open the saving account, right? You should be legally competent that you can enter into a valid contract. So, can a minor be opening a saving account? Because whatsoever the contract is done with the minor, except the case of the life saving services to the minor, that is void ab initio, that is basically considered to be cancelled as per the Indian Contract Act. So can a minor be opening a current account? Yes, minor is allowed under the by the Reserve Bank of India, that they can be opening a account. Like even if it is 1 year old, they can be opening the account. But up to when the age is like below 10 years, they can be opening a guardian operated account. But from the age of 10 and above, up to 18, they can be opening the self-operated account also. So that's allowed. So applicants make the application to the bank that they want to open the account. So the proper application is to be submitted along with the KYC proof, photograph, etc. And further, it should be acceptable to the bank as per the terms and conditions. Now let's have a look at the special categories, special saving bank accounts. Special category saving bank account. First of all, it's related to the saving bank account of the minor. Is minor allowed? Yes, minor is allowed. As per the Indian Contract Act, it is not allowed because minor cannot be entering into the valid contract. But as per the RBI guidelines, as per the Reserve Bank of India guidelines, minor can open the account, they can operate the account also, and also they can be like endorse the instruments. The instruments can be in their name. They can be the drawee, they can be the drawer of the instrument, not the drawee, they can be the drawer of the instrument. Who is drawer? Who basically writes the check. That's said to be the drawer. But what are the conditions? What are the conditions? Like up to the age of 10, up not up to basically below the age of 10. If the age is below 10 years, right? If the age is below 10 years, in that scenario, you'll be opening a guardian operated account. Guardian operated account, right? Along with the guardian or self-operated, two things are there. Two things are there. Even if you are age of 13 years, 15 years, 17 years, but below the age of 18 years, you can be opening a guardian operated account. But if you are aged 10 years or above 10 years, you can be opening a self-operated account also. That's basically allowed. That basically is allowed, right? So what are the guidelines? Let's say you are dealing with person M who is aged 13 years. Who is aged 13 years. Can this minor be opening the self-operated account here? Is it allowed? Yes, it is allowed. Because the person is aged above 10 years, so self-operated account is allowed, but there are some conditions. What conditions? That this minor should be literate. This minor should be literate, that the minor should be able to read or write. And also the AF is, that is the account opening form, is to be signed in presence of the bank official. This is the condition. These are the condition, two specific conditions. AF is to be signed in presence of the bank official, and also the minor should be literate, should be able to read or write. Then it is allowed that you can be opening the self-operated account. But let me tell you, because the minor is not able to enter into contract as such, it cannot be binding the other person. So the self-operable minor account, in case of the self-operable minor account, nomination cannot be done. Nomination cannot be done. The nomination facility won't be there in case of the self-operated account. No nomination facility available. But if it is guardian operated account, then the nomination can be done on behalf of the guardian. And there is a special condition, and you might not be aware related to it. This is quite important. This is a special condition. What that condition says, that if you are aged below 14 years, if you are minor and you are aged below 14 years, right? In that scenario, if it's a self-operated account, in such accounts, the maximum balance is up to rupees 1 lakh only and not above that. So for the balances, for the accounts where the minor is 14 years or above, there is no limit related to the balances. But for here, where the age is like up to is below 14 years, then the maximum balance can be 1 lakh rupees. Clear with it? And the minors who are below 10 years, it is mandatorily like they can be opening account just with the natural guardian, that is father or mother. Account is operable by the natural guardian, father or mother. After that, it's about the illiterate person account. Is illiterate person allowed so as to open the account? Yes, allowed. So if the illiterate individual who is basically capable of entering into a contract, they can be opening a saving bank account without any issue. Illiteracy means they cannot be reading or writing, but they can be entering into a contract. So if you can be entering into a contract, you can open an account, right? And further, in that scenario, because they cannot read, right, they cannot be, they cannot do the signatures. So they are to affix the thumb impression. They are to affix the thumb impression in the presence of the approved witness that is to be done. And they are to visit in person so as to do the withdrawals. And that is the check facility available for them. Can you issue a checkbook to a illiterate person account? Checkbook facility. Kindly do answer at the earliest. In an illiterate account, can you be issuing the checkbook? Yes or no? Answer is no. Checkbook facility cannot be given. Because how would you be managing to match the thumb impression? That's not possible. That is not possible. So the checkbook facility is not allowed, right? But the point is that they are to affix the thumb impression. And for male, they are to affix the LTI, that is a left thumb impression. For the male, it is the rule of LTI. And for the female, it is RTI, right? Thumb impression, right? That is to be affixed. That is to be affixed. And in case, even if a loan document is to be signed by an illiterate person, it is to be executed by an illiterate person, you have to write this particular fact, this is RTI or LTI. You have to mention it along with that if it is RTI or LTI. Okay. So for the withdrawal purposes, the illiterate person should be coming personally to the branch and they are to affix the thumb impression in the presence of the officer. And no checkbook facility can be like extended. That cannot be given. And is the joint account allowed? Yes, joint account is allowed. Like an illiterate person can be opening a joint account, but not with the illiterate person. They can be opening the joint account, but with the literate close relative. ध्यान रखिएगा. They can be opening the joint account, but with the literate close relative and not with the illiterate person. They cannot be opening the joint account with the illiterate person, but with the literate close relative only. Right? It could be father, son, husband, wife, mother, daughter, etc. Right? That can be done. Clear with it? And after that, it's about the saving bank account of the blind person. So do confirm at the earliest that if you have understood the topic so far. Kindly do confirm at the earliest that if you have understood the topic so far so that we can move ahead with the another topic. So the next topic, it's about the saving bank account of the blind persons. Now the blind persons are fully competent that they can be entering into the contract, right? So there is no restriction related to opening of the saving bank account. They can be opening the account with signature and also the thumb impression for the blind persons, right? And if the blind person is illiterate, then they are to apply the thumb impression only. Like if you're blind person, if you deal with a blind person and that blind person is literate, then you'll be going for the signature plus the thumb impression, right? But if it is illiterate, then you'll be going for just the thumb impression. Clear with that, right? So there is no restriction related to opening the saving account for the blind person. No restriction related to it. But the signatures must be done in presence of the bank official, and also we are to have a witness along. The witness is required. Like in the case of the illiterate person, the witness is required. The same way the witness is required in case of the blind person. And also the certification is required. A declaration is to be done. And the witness must be clarifying that whatsoever the contents of the documents, those have been explained. So whatsoever the documents have been explained, right? That kind of witness is to be required. Because the person cannot see, like they can be like repudiating the fact that they do not know that where they signed or something. That's why the witness is required. Otherwise, the checkbook facility can be given to them. The normal, all the facilities can be given to them, right? But you are to deal with the witness. Then further, it's related to the saving bank account of the incapacitated persons. The persons who cannot sign, let's say loss of both hands is there, or let's say they are having no hands, no toes. In that scenario, what is to be done? Is the account can be opened? Yes. So bank may be entertaining the request from the handicapped person, the incapacitated person who have lost both the hands. Like they can be accounts can be opened for such cases also. Now, if there are no hands, then you have to take the toe impression. Then you have to take the toe impression. That is to be taken, right? And that it must be done in presence of the branch manager or let's say department head. And definitely there should be a witness. There should be a witness. Then it is very much important. It's related to accounts of the Parda Nashi women. Very much important topic. The next topic, it's about the accounts of the Parda Nashi women. Is it allowed so as to open the Parda Nashi women accounts? Like who is Parda Nashi women? That lives in seclusion. That lives in seclusion. Like who is having the limited interaction with the outside world. That's basically presumed to have less exposure to financial or the legal matters. That's a Parda Nashi movement. And bank must be proving that she has understood the nature of the transaction, that she has executed it voluntarily, and further, the burden of proof will be like on the bank. The burden of the proof will be like upon the bank only, right? So presumption, there is always a presumption of undue influence exists because she is not capable herself. It's not considered that she is knowing the transactions well, right? And the contracts are basically presumed to be are not consumed basically presumed to be consent free because for the transactions we need a free consent. So for the banking precaution, it is very much required so as to obtain at least two attestation from the two persons. Two respectable persons should be attesting who are basically known to the bank, who are known to the bank, right? They should be verifying invariably the signature and the account opening form. And also each and every withdrawal transactions are to be verified by the two respectable persons who are known to the bank. Only then such accounts can be allowed. Only then such accounts can be allowed. Clear with it? After that, it's about the saving accounts for the non-individual entities. It's about the next topic. It's about the saving accounts for the non-individual entities. I told you that in some cases it is allowed at the even the for the non-individual entities, the saving account can be opened like primary cooperative credit societies can be done, right? And for KVIs, it can be done for agriculture produce market committees, for societies under the registration societies registration act, and for the DWCRA, that is development of women and children in rural areas. For the SHGs, the saving fund account can be opened, which are registered or unregistered. For farmer clubs and for VVV, that is Vikas Volunteer Vahini, the saving fund accounts can be opened. Otherwise, only the individuals can be opening the account. But for these entities also, it's allowed so as to open the saving fund account. Then it's related to maintenance of balance and the interest payment. Maintenance of the balance and the interest payment. So banks basically do require sometimes that the minimum average balance is to be maintained. That we say to be MAV. What is MAV? It is minimum average balance, minimum average monthly balance. That is MAV. It is required. And if it is not required, then the penalty charges may be applicable. And what is the calculation formula? It's very easy. It's very easy. So you have to basically look into the balance and further multiplied by the days, multiplied by the rate, and for the summation of all these two for the complete month and divided by the 365. This is the formula related to it. For the interest calculation. For the interest calculation, this is the formula, right? So let's just assume that you deposited by cash rupees 10,000. Now the balance is rupees 10,000 here. And further, you again credit rupees 1 lakh to it. So the balance is now 1 lakh and 10,000. And further, you withdrew On another date, rupees 20,000, the balance is 90,000. Then you basically will do 2,000, 88,000, and so on. So these transactions were done. So these transactions were done. And now let's say case that we have to calculate the interest for this particular month of April 2021. And the rate of interest we assume to be 3% per annum over here. Right? How will be calculating? Like for the balances, we have to calculate the rate of interest. So balance is like 10,000 is basically rupees 10,000 for 3 days. The balance is 10,000 for 3 days. So it will be 30,000. And basically then 1,10,000 for 2 days. It is 2,20,000. 90,000 for 1 day, 88,000 for 13 days, and so on. So we calculated the product over here. So we calculated the product over here. Product of what? Product of the balances and for the days that this balance remained there in the account. And that came out to be 24,79,000. Right? I'm not just going into the calculations right now, just explaining the things to you, right? So we calculated the product of the balance and the number of days the balance was there in the account, and we basically calculated the product of the same, and we summed all that, we basically aggregated all them all. Then it came out to be 24,79,000, and we basically calculated the 3% of it. And further, for 1 day, it will be like 203.75. So interest which was calculated was 203.75. Accordingly, we calculated. And the monthly average balance was what? It is 247,900, whatsoever the product was there, total product was there, divided by 30. That is the average balance that is being maintained for this particular transactions. For these particular transactions, this balance was maintained. Clear with it? Getting the idea that how the balance is calculated, how the interest is calculated. So we just look at the balance. We just look into the balance, and then we look into the balance that for how many days this balance was there, like the number of days. Then we take the product of this balance into the number of days, and that was basically related to it. Okay. Now after that, it's about the time deposits. It's about the time deposit. Now, what is time deposit? Like in the case of the demand deposit, you can be withdrawing it anytime, but the time deposit is there for the fixed period. It is there for the fixed period, and the fixed interest will be paid upon it. Fixed interest will be paid upon it, right? And as compared to that of the saving account interest, the interest which is paid is relatively higher side. It is on the relatively higher side. So what is the periodicity of the time deposit? The minimum it is 7 days, and for maximum it is 10 years. For maximum it is 10 years. And definitely the banks do make the efforts. They do prefer that the deposits are there in the multiple of 3 months, like 15 months, 18 months, 21 months. But it is not like mandatory. It's just a preference to the banks, toward the banks. Okay. So the minimum period for the FDR, for the term deposit, for the recurring deposit, it is 7 days. For the fixed deposit, I'm talking about particularly, it is 7 days, and the maximum period is 120 months. That is 10 years. Clear with it? Now let's have a look at the operational instructions. Like definitely it can be singly operated, it can be jointly operated, it can be either a survivor, it can be former survivor, right? It could be anything. In case of singly operated, like it will be operable by a single person only, and the nomination facility is also available there. When we're talking about the payable jointly, it means two joint account holders are there, and they do provide their consent, and only then the transaction can take place, otherwise not. Like let's say even if the premature withdrawal is to be done, both have to sign, right? And in case of either survivor, after the maturity or on the maturity, anyone can operate the account. But if premature withdrawal is to be done, kindly please take a note. For premature withdrawal, all the account holders are to sign. The joint consent is to be given, right? But if anyone dies, if there is demise of one person, right, out of the either survivor accounts, then the survivor can be operating the account. then survivor can be operating the account without any issues. And what about the former or survivor case? What about the former or survivor case? Only former, that means only the primary account holder. Former means we are talking about the primary account holder. Only the primary account holder can operate during the lifetime, and survivor will be getting the right only when the former dies. Only when the former dies, the survivor can be having the right, otherwise not. And what about the premature withdrawal? The former can be doing the transactions. The former can be doing the transactions. Clear with it? And what about the former survivors jointly or last survivor? Formers, survivors jointly or last survivor. After the death of the former, all survivor must operate jointly. After the death of the former only, like where the case related to former is there, like let's say one former and multiple survivors are there. Multiple survivors are there and that too jointly operated. Now, if the former dies, then the survivors will be operating jointly. That's the scenario. Getting it? Right? Further, after that, it's about the interest on the fixed deposits. Interest on the fixed deposit. So interest is generally paid on quarterly interval, but the banks can also be like in today's scenario, the banks are there are also the schemes where the banks are paying monthly interest to the customers. So it can be paid monthly, it can be paid quarterly, and it can be the case in case of, let's say, when it's a simple FDR. When it's a simple FDR, the interest will be credited. The interest will be credited to the saving account, right? But if it is a cumulative FDR or compound interest FDR, in that scenario, whatsoever the interest is, let's say if you have earned, let's say you have made an FDR of amount rupees 1 lakh and you earned an interest of rupees, let's say 1000. So whatsoever the interest you earned will be accumulated in this FDR. Like it will then become 1 lakh 1000, and for the next quarter or for the next month you'll be earning the interest upon 1 lakh 1000. So it is compound interest effect is there. So the interest is reinvested in case of the cumulative FDR. The interest is reinvested in case of the cumulative FDR. Clear with it? Then it's related to the term deposit accounts of the minor. Term deposit accounts of the minor. So the rules and regulations are all the same. The rules and regulations are all the same in case of the term deposit accounts of the minor. There are no issues related to it. Minors are allowed so as to open the term deposit account. Yes, they are basically allowed. Like if the self-operated account is also there, then also they are allowed. So if it is allowed by the banks, the customer is allowed, the minor is allowed that they can be opening the fixed deposit account, right? And the same terms and conditions will be applicable here. After that, it's about the mode of repayment of time deposit. Mode of repayment of time deposit. From the exam point of view, this is important one. From the exam point of view. Why? The threshold limit is 20,000. In general, we do not do the cash payment for the time deposit, but from the exam point of view, it's important. Let's say for if the amount is basically, let's say if the total amount, if the total amount we say that is principal and interest, whatsoever is earned, if it is greater than 20,000, then account pay payment can be made. Account pay payment can be made. So that's basically the case which should be there. Which should be there, right? Otherwise, if it is, let's say 1,999, right? In that scenario, it can be paid in cash also. But if it is 20,000, above 20,000, if it is above 20,000, then only the account pay payment is required, or through the customer account, the payment can be credited, right? Further, it's related to payment of interest, payment of interest on non-business working day. let's say if the maturity date of the FDR is falling on some public holiday or bank holiday, that's a non-working day. Let's say maturity is on 31st of July and that's a holiday on that particular day. And your maturity of the FDR is on that particular day. Then the interest is to be paid on the original contracted rate. Let's say the interest was paid on the FDR 7%. So for this particular day also, for the holiday, when the maturity was there, because the no interest was to be paid otherwise on the maturity date, right? But now if there is holiday, the interest will be paid at the contracted rate. Clear with it? If the public holiday is there or non-working day is there, if the bank holiday is there. So whatsoever the intervening days will be there, the interest at the original contracted rate will be paid. After that, it's about the deduction of the TDS. The next topic, again, it's important one. It's about the deduction of the TDS. TDS is what? This is tax deducted at source. It is a tax deducted at source. Now, what is tax deducted at source? Let's say if you have earned the interest on the FDR up to a specific threshold, it is allowed that no particular TDS will be deducted. No particular TDS will be deducted up to a particular threshold, right? But if it crosses a threshold, like for senior citizens who are aged 60 years or more, if the amount is greater than, if the interest earned is greater than 50,000 rupees, then the TDS is deducted. And also for others, if the interest earned is, let's say, greater than 40,000 rupees, then the interest is deducted. Then the TDS is deducted. And that TDS is deducted as per the section 194A of the Income Tax Act. You need to memorize this section. This is 194A. This is 194A. And further, if this is basically the tax rate. Otherwise, if the PAN card is available, the TDS is deducted at 10%. If the PAN card is available, the TDS is deducted at 10%. But if PAN card is not available, in that scenario, the TDS which will be deducted will be 20%. Then it will be 20%. Further, if you feel like that you're having income, total income is below the taxable limit. Let's say the person A is here, whose total income from all other sources is, let's say, total income, including the interest, is 3 lakh rupees per financial year. The person A knows that as per the applicable tax slab, that's not coming into the taxable slab. That's basically coming under the tax-free slab, right? Now, the person A, if the person A is aged below 60, he or she can be submitting 15G form. But if the person A is aged 60 or above, then they are to submit the 15H form. So it's just like telling the bank that we are not under the taxable limit and our total income is below the taxable limit, and hence the TDS should not be deducted from our interest earned, even if it crosses a threshold. The threshold is 40,000, exceeding 40,000 for the persons who are not senior citizens. And if the person is senior citizen, then the threshold is 50,000. Clear? So they can be submitting the 15G form. 15G form is for the persons who are not senior citizens, and 15H form is basically for those who are senior citizens. In that particular scenario, the 15H form will be applicable, and this is to be submitted for each and every financial year. It's not the case that you have submitted the 15G form or 15H form in 1 year, then it will be applicable for the other year. So no, you have to submit it on each and every financial year, and it's valid for one financial year only. And further, it is to be submitted at the beginning of the each financial year. It is to be submitted at the beginning of the each financial year. Clear? And also whatsoever the TDS that will be deducted by the banks under the section 194A, under the section 194A, whatsoever the TDS is deducted, that is to be deposited, to the government. That is to be deposited to the government by the 7th of the next month. Let's say if the TDS was deducted for the month of April, it is to be deposited to the government by the 7th of May. Then it's related to advances against the bank's own time deposit receipt. Now see, advance can be given, but only against your own time deposit receipt, but not related to other bank receipts. And what is the quantum that can be financed? It is 80 to 90%. It is 80 to 90%. Means let's say if your FDR is 1 lakh rupees, you can take a demand loan amounting rupees 90,000 against it. Right? And the margin basically varies from bank to bank. And what is the interest rate charged? Like, let's say if the bank is paying you 7% on the FDR, the bank may be charging, let's say, the spread of 1 to 2% above it. That varies from bank to bank. Right? The bank may be charging the spread of 1 to 2%. And that basically varies from bank to bank. And each and every FDR is basically considered as a separate contract. It is considered as a separate contract, and the receipt is known as what? It is known as a FDR, that is fixed deposit receipt, and that is to be surrendered. That is to be surrendered to the bank, because in case if the proper margin is not maintained, that the customer is not servicing the interest, or let's say the FDR matures, and in that scenario, what will be done? In that scenario, the bank will be like diluting the FDR and further will be servicing the debt. And there is a restriction from the Reserve Bank of India, as I told you, that no loan is basically allowed against the FDR of the other banks. This is very much important. You cannot be sanctioning loan against the FDR of the other banks. Then it's related to the renewal of the FDR. Renewal of the FDR. Like, customer instruction is to be given on or before the maturity. Renewal instruction on or before the maturity is to be given, and there is a instruction, let's say if it's related to the auto renewal facility, auto renewal instruction is given. So for the same tenure, the FD will be renewed at the prevailing rate of interest that will be applicable at the time of the maturity. Getting it? But let's say if no instruction is given for the 14 days, if it is not auto renewal and no instruction is given for the 14 days, then in that scenario, the renewal won't be done at the prevailing rate of interest. The renewal won't be done at the prevailing rate of interest. And there is one more factor. Let's say the FDR matured on 1st of the Feb and there was no instruction given by the customer for the next 14 days. Let's say up to 14th of the Feb, no instructions was given by the customer, and customer said that I want to renew my FDR. No, the FDR will be renewed from 15th Feb onward only. But if the instructions were given on, let's say, 14th of the Feb even, then the FDR could have been renewed from the back date, from the 1st Feb itself. Getting it? Then it is related to the two-in-one account. Two-in-one account means saving plus FD account we are talking about. So two-in-one account means saving account plus FD linked account. That's said to be two-in-one account. So it's a combination of two things: current account or saving account plus the fixed deposit account. So you will be having the benefit of the two. Like, you will be having the liquidity. You will be having the liquidity benefit that you wanted have always in the case of the saving account of the or the current account. At the same time, you'll be having the higher return also that you want to get in case of the FDR account. So you'll be having the higher returns and you'll be having the liquidity. You'll be having both the benefits at the same time, right? So the one case, it's related to the auto sweep facility. Auto sweep facility. What is the working mechanism? So it's like a threshold amount will be there. It will be like a stipulated amount. It will be like a threshold amount which will be stated. Let's say if it is 10,000 rupees. So whatsoever the balance which is exceeding 10,000 rupees, that will automatically be converted to the fixed deposit. So that's about the stipulated amount, whatsoever the amount that you have stipulated. It may be 50,000, it may be rupees 1 lakh. That depends upon, as that will be as per your wish from the customer's will. It will be, right? So what will be the feature? Like, as per the bank specific units, or generally as in the multiple of the 1000, it will be converted into the FDR. It will be transferred to the FDR. So let's say if you are having, if I have to set the threshold amount of rupees 10,000 and your balance is 15,000. So what will be done? So the balance above rupees 10,000, that is 5,000 rupees, will be converted into FD into the multiples of 1000 each. So 1000 into 5 FDRs will be created. So now you'll be earning higher interest rate as of the FDR, and also at the same time you will be having the liquidity with you. So let's say even if you withdraw, we want to withdraw 15,000 rupees, all those FDRs will be cancelled and the bank will be paying you 15,000 rupees. Clear with it? So that's the auto sweep facility. And the same way we are having another facility, that's a reverse sweep facility. Reverse sweep facility. Like I explained the mechanism to you already, that you are having 5 into 1000 FDR, 5 into rupees 1000 FDR. Now, if you want to withdraw the amount, so these will be cancelled and the amount will be paid to you. That's a reverse sweep facility. Why this facility is there? Because we want to honor the transactions without the failure. So there is no need to break the entire FDR. Let's say if you want to withdraw 11,000 rupees. So what will be done? 10,000 as such is already available in your account, and the 1,000, like one FDR will be cancelled and the amount will be paid to you. Right? So it works in that way. So that's a reverse sweep facility. So that will be all related to this video. I hope that you must have understood all the concepts related to it. So if you have liked the content, make sure to like this video and further share this video among your friends and colleagues. And if you want to get the PDF of this file, simply just do WhatsApp JAIIB to the number 83609 and I'll be sharing all the details. A complete course is available on our application, which is available at the link iibf.info/app. And for iOS, you need to enter the ORG code, that is the organization code, which is GEGKT. So that will be all. Thank you so much and see you again in the next video.